Alright, for this video we want to go through a sample form 8962 premium tax credit for the 2023 tax year. So this form is filed with your Form 1040 and it's necessary if you were enrolled in the health insurance marketplace during the year and received any advance premium credit. So you would get something like this in the mail, IRS Form 1095A, a health insurance marketplace statement from the insurance company. And we need to use the details on this form with your 8962 and your overall income to determine how much your premium tax credit should be. So in this example, we've got John taxpayer here. He is a single filing taxpayer and he has one son, Alex taxpayer, and the health insurance coverage that John pays for is a family plan. So he gets this 1095A at the end of the year. He's doing his 1040. And he needs to use that information to complete the 8962. So I've got the 8962 here with John's 1040, so we'll go through all of these pieces. We've also got the 2023 instructions for the 8962, so we'll have a look at that as well, because there's some tables in there that are important. And we've got one slide here covering some background on this form and the credit, and then the details on the fact pattern. So why do we need this form? So again, we need this form if you are enrolled in a qualified health insurance plan through the marketplace, and you need it because you very likely received an advance premium tax credit. So in other words, you received an advancement of this credit which helped reduce the monthly premium that you actually paid to the insurance company. And so we need the 8962 to basically reconcile the estimated income that you told the marketplace versus what you actually earned for the year. And then that is effectively a true up or true down of the amount of credit that you should have gotten. And so what's really important is this 1095A, a copy goes to the IRS. And so if a taxpayer receives this and they don't complete the 8962 with their return, you're very likely going to get an IRS notice. The IRS notice is going to say, hey, we know you had some advanced premium tax credit. You didn't do the 8962, so we can't tell whether or not you actually have to repay some of it or we owe you money, right? Maybe you might get an additional credit amount that is only calculated on the 8962. So in this example here, we've got John Q. taxpayer. He's a resident of Florida and has an 8-year-old son, Alex. John works for a small business and he doesn't have health insurance coverage through the company. Now, he was eligible to enroll in the plan, but the coverage was not going to be affordable. And so if that's your case, you can go to the marketplace. If they determine it's unaffordable, you can enroll through a health insurance plan through that marketplace. And so that's what he did. Now, the monthly plan premium is $678.05 a month. And then the amount of advance premium tax credit that John received was $579.21 per month. So he effectively pays the difference there, right? And so at the end of the year, he gets this 1095A showing all the monthly amounts, and now he's got to do his 8962. So if we look at the 1095A here, so it'll look very similar to this. You'll have the recipient's name, so basically the policy holder, their information, the name of the insurance company, and then the policy term dates. And so in the covered individuals section here, we can see there's John, he's a covered person under the plan. We have his son there, dates of birth for each of them, and then the coverage starts and end dates for the full period. And then part 3 is all the financial information. So what was the premium for the month? What is the second lowest cost silver plan? This is important in figuring out how much premium tax credit you're available, and then the portion that was advanced to you, right? So when you enrolled, how much of that advanced premium tax credit is being paid towards you, paid towards your monthly premiums to help reduce that actual monthly amount that you're paying the insurance company. All right, so if we have a look at the 8962, how do we complete this form? So 8962, again, it's filed with the Form 1040. So you need to do your Form 1040 and include this 8962. So in part 1 here, tax family size, enter your tax family size. So in this case, we have John, right? He's one person, and then we have his son, Alex, is a second. So he has 2 individuals that are part of his family, and that's who's covered under the plan. Now, modified AGI, if we go to page 1, we can see here at the bottom, John's adjusted gross income on line 11 is $46,500. So you can see he doesn't have much income here other than his W-2 wages from his employer. So employer wages $46,500. So his AGI is quite simply $46,500. Now, there's a couple of modifications that could be made there. If you have any tax-exempt interest income, if you're claiming the foreign earned income exclusion on the 2555, you might have an adjustment there, or non-taxable amounts of Social Security benefits. Now, the dependent here, John's son is 8, right? So he doesn't have any income. He doesn't have any modified AGI. So that's why 2B is blank. So the total household income is going to be $46,500. Now, on line 4, the federal poverty line information, this is important because your eligibility for the premium tax credit and to what extent you might have any phase-outs depends upon what percentage your household income is of that federal poverty line, depending on where you live. So if we have a look at the form instructions here, they do have a table that covers this information. So if we look at table 1.1 here, you can see there's 3 separate buckets, right? So we have Alaska, Hawaii, and then the other 48 states plus District of Columbia. So if we go back to the table here, we have table 1.1. This is the one we're going to be working with, right? Because we live in Florida, or John lives in Florida for that matter. But they have separate tables for Alaska and Hawaii. So if we look at the table 1.1, if your family size on the 8962 is 2, right? That's us, we're 2. So the federal poverty line amount that needs to be reported on line 4 is the 18,310 figure. So we go back to line 4, enter $18,310, and so our household income as a percentage of the federal poverty line is 253%. So we're just doing some simple math here, right? So 46,000 divided by the 18, so 2.53, or multiplied by 100, we got 253%. So 253%. That's important because in order to qualify for the credit, again, your income has to be generally at least 100% of the federal poverty line. But if it's too high, if your income is too high, then you're no longer eligible for the premium tax credit. So the 253% there, that we'll come back to that number when we get down to the bottom here, when we have to compute our repayment limitation in part 3. So we've got the 253% here. Now we go into line 7, the applicable figure amount, which we also have to reference the tables as well. So if we go back to the form instructions here, we're looking for the applicable figure tables, that is, rather. And we're looking for our 8962 line 5 amount, find whatever range it's within, and then enter the appropriate value that's to the right of it. So if we have a look at the 8962 again, the line 5 figure here is 253%. So we're looking for 253. And we can find here, right, if form 8962 line 5 is 253, then the applicable figure is going to be 0.0412. So we go back to line 7, we put in 0.0412, and that's the applicable figure from our worksheet there. Now lines 8A and 8B. So 8A, the annual contribution amount. Take the amount from line 3, multiply it by line 7. So we've got our adjusted income there, $46,500 times 0.0412, and that gives us $1,916. 8B, take that 1,916, so 1,916 divided by 12, gives us with a monthly amount of $160. Now the $160, this figure is going to eventually be transferred down here in part 2 to column C. So we'll come back to that, but keep that number in mind. So now if we're moving on to part 2, the premium tax credit claim and reconciliation. So this is where we use a combination of the data that's being reported on the 1095A with what we've calculated here already to figure out, okay, how much total premium tax credit should we actually get? How much was advanced? and then we decide, well, did we get paid too much or did we not get paid enough? And that'll determine how we adjust our tax liability up or down for the current period. All right, so if we look at lines 12 through 23 here, they do have a line 11 for annual totals. So you do have the option to just input the annual totals if the monthly amounts are all the same, or you can type them out separately down here. In our case, we just entered each amount on a monthly basis. So what amounts get pulled from the 1095A? The 1095A is going to give us amounts for column A, B, and column F. Column C, D, and E, we do the calculation after. So A, B, and F are coming from the 1095A, A, B, and C columns. So the first one, column A, the $678 amount on a monthly basis, this is coming from the 1095A column A. So that's the 678.05 figure. Now, the cents, fractions of a dollar there, when you do income tax returns with the IRS, you can round to the nearest whole dollar. So instead of putting in $678.05, you can just do $678. Column B comes from 1095A column B, right? So the $718 figure there, the monthly second lowest cost silver plan. So that's all the amounts inputted in column B. And then if we jump over to column F at the end, this is column C from the 1095A. So this was the advanced amount of that premium tax credit, or $579 per month. And that's the amounts we're seeing here, right? $579.21. So we've got A, B, and F inputted. Now column C, again, that's coming from 8B up here. So we do this computation up here in part 1. The $160 amount is transferred over here to column C for each month. And then we do some math here to calculate columns D and E. So column D, the maximum amount of assistance, they want us to subtract column C from B. So we take 718, column B, 718 minus 160 gives us $558. And so we've done that for all the months here for 2023. And then in column E, the monthly premium tax credit allowed is the smaller of column A or D. So column A is 678, column D is 558, so we use the smaller amount of $558. Now moving on to lines 24 through 29. So 24, the total premium tax credit, we want to add up lines 12E through 23E. So we look at column E, add up all these months. So 12E through 23E, so the 558 times 12 is $6,696. On line 25, we add up columns F, right? So 12F through 23F, so 579 times 12 gives us $6,948. So if we pause here for a minute and just talk about these line items, $6,948, that was the advanced amount of the credit to you during the year. So that's how much they advanced to reduce your monthly premium that you were paying to the insurance company. Line 24 represents the amount of credit that you actually should get based on your overall income, family size, and where you live, right? So in other words here, because the advanced amount was greater than the amount you were supposed to get, you actually owe some money back. So the repayment of the excess credit is completed in part 3 here. Now, if these two numbers were reversed, you would actually get an increase to your tax refund. And so you would get some additional premium tax credit reported on the 1040. So in this case, though, because the advance payment exceeds what we should have gotten, we're going to owe a little bit more. So that's on line 27 here. We have excess advance payment of premium tax credit. If line 25 is greater than 24, subtract line 24 from 25 and enter the difference. Now, the repayment limitation. This is designed to make sure that, okay, if you have to repay some of it, we don't want you to repay more than a fixed amount. So the $1,800 here, again, we have to reference the instructions one more time to figure out what our repayment limitations are. So in Table 5 here, the repayment limitations, if our filing status is single, we use this column. If it's anything other than single, we can use the second column. In this example, because John, he's unmarried, but because he has a dependent, he qualifies for the head of household status. So John is filing HOH for the year, so we're going to use the head of household filing status, which means that we use the right-hand column here. So now we have to look back at the 8962, line 5. All right, 8962, line 5, 253%. So that's the percentage of household income over the poverty line, so 253. So here we're not less than 200, we're at least 200, but less than 3. So given 253%, any other filing status, $1,800. So $1,800 is the repayment limitation cap based on his income. All right. So now the excess advance premium tax credit, smaller of 27 or 28, the smaller amount is $252. So $252 is the amount of additional tax that John has to pay, which represents basically a repayment of the excess amount. So the $252 is reported on Schedule 2. So Schedule 2 is where we report additional taxes. So that's done in Part 1 here. We can see on line 2 of Part 1, we have excess advance premium tax credit repayments, and we are attaching the 8962. So $252 is the excess tax, and ultimately that's flowing through up to page 2 of the 1040. So page 1 of the 1040, page 2 of 1040. We can see here on line 17 the excess tax. So the total amount of tax that he was liable for based on his income, $2,773. He has to increase that tax liability by $252. That's a repayment of the advance premium tax credit. So the total taxes that John is liable for is $3,025. Now, he's also claiming the child tax credit, and he's got some W-2 withholding, so he's still getting a refund. But the point is to focus on lines 18 and 17, right? The total tax liability increase because he had an advance payment. He has to return some of that excess advance premium tax credit. All right, so that covers it for this tutorial. I hope that was helpful. Any questions, please feel free to leave a comment below. I try to get to as many of those as I can. And I look forward to seeing you again on the next video. Thank you.